Vice President, thank you for coming back on Bloomberg TV. What do you think the most likely outcome is? Lengthy extension or short extension? What is the EU's preferred route?
Well, first and foremost, we need some clarity from UK side. It's for them to file a formal request for the EU, and then EU can decide unanimously all 27 member states. So currently we have not received concrete requests for extension. So if those kind of requests would come, first it would be for UK to determine whether it's short or long extension, and each of those scenarios has its own different implications.
But, Vice President, the EU seems to be saying, well, look, it's the UK's turn to move, but actually the UK is kind of stuck. We don't really know what Theresa May can or can't do. She seems to be almost, overtaken by events every week. What would your advice to her be? What should she do now?
Well, it's difficult from outside to give some advice. It's, of course, for UK government and UK Parliament how they interpret the results of the referendum. As you know, from EU side, we regret the outcome of this referendum, but we respect it. But it's for UK authorities to provide the interpretation of this. If we talk about Brexit, one thing is clear: Brexit with deal is going to be much less disruptive than no deal Brexit. If we talk extensions, for example, if we discuss long extension, something which needs to be kept in mind is the fact that in this case, UK would also have to participate in European Parliament elections, because according to EU treaty, all EU member states have to be how to elect members of European Parliament. And as the EU, of course, we cannot take the risk if the legitimacy of European Parliament's decisions will be put on question based on irregular composition of European Parliament. So that's, for example, one implication which UK needs to keep in mind when filing that kind of request.
Right, but Vice President, if the UK were to actually organize itself to have some EU elections, right, for the parliamentarians, would that not almost be like a referendum? It could give us a mood of what happens in the UK. Would that be useful?
Well, in this case, we are just outlining the implications of concrete request. So there is a possibility to have a short extension until European Parliament elections, but of course, from EU side, it would be helpful to decide on this to see what purpose it exactly serves, so what aim it helps to achieve in terms of the Brexit process. If it's a long extension, it's just a complication or a consequence which comes from the EU treaty.
What's your take on the possibility of a no-deal Brexit? So we're 10 days away of March 29th. Is a no-deal still possible? It seems there's a general consensus in the UK that that will not happen. Is it the same view in Brussels?
In any case, also from EU side, we consider no-deal Brexit as a scenario we should be trying to avoid, because it's going to be much more disruptive than withdrawal with the agreement. But we must admit that following two votes in British Parliament rejecting the deal, the probability of no-deal Brexit has increased. And from EU side, we correspondingly made the necessary preparations or contingency measures also for the case of no-deal Brexit.
Mr. Dombrovskis, we've talked a lot about the threats of a no-deal Brexit, and I wonder, as we fold this into the world here at Bloomberg, a lot of the focus has been on the financial sector in particular. How concerned, or what sort of arrangements do you have in place if there is a no-deal Brexit as it relates specifically to the financials, as we worry about the trade between, of course, the EU and the UK?
Well, as regards specifically financial sector, there was a working group between European Central Bank and Bank of England with input from both European Commission and UK Treasury assessing risks for financial stability. There were several areas identified, like, for example, derivatives clearing, and EU has taken necessary steps, necessary equivalence decisions, temporary equivalence decisions to mitigate those risks. So, of course, still also in area of financial services, no deal Brexit is going to be more disruptive, and it will require more preparation, more work from the financial markets participants' point of view to adjust to the new situation. But we mitigated systemic risks to financial stability which had been identified by ECB and Bank of England.
Some of the broader risks, of course, that we're looking at is a global slowdown and a little bit of softness or weakness, of course, in some of the Eurozone countries. We've seen some PMI numbers come out. Some of, Germany, France, for example, look a little bit weaker. Are you concerned about a Eurozone slowdown, or is this just a short-term blimp on your radar?
First of all, EU's economy continues to grow for a 7th year in a row. And this year we expect that all 28 EU member states will continue to grow. Employment is at record high levels. Unemployment is at record low levels. So one can say that we are in good economic times. But indeed, we recently had seen some slowdown in EU's economy, which comes from both external and internal factors. I could mention international trade tensions, trade conflicts, or slowdown in emerging economies, notably China. Also, there are internal factors like uncertainty surrounding Brexit and also uncertainty surrounding fiscal trajectory in some member states, notably Italy. And as a result, indeed, we had seen some slowdown of EU economy, but we still expect EU economy to grow at 1.5% this year.
But Vice President, so you mentioned Italy. What will happen with the budget there? Has the EU been too lenient on Italy?
Well, as regards Italy's budgets, we had been in difficult discussions with Italian authorities last year. And as a result of those discussions, Italy adjusted its budget quite substantially and reduced the planned budget deficit quite substantially. But what we see is that from all EU member states, Italy has a most pronounced slowdown of the economy. So it means that the fiscal trajectory the government has chosen initially brought some degree of financial instability, increased interest rates in Italy, both for sovereign lending and broader economy for Italian companies and consumers. It negatively affected confidence indicators, and as a result, Italy's economy slowed down. So I think this is another reason for Italy's government to reconsider its fiscal trajectory and ensure that both budget deficit and debt are on downwards path.